Well, Rob, some of that weakness we saw in the markets last week really has carried through to this week. And of course, we had the US and the UK closed yesterday. And it appears the weakness, FTSE down over 2% at this stage, they're playing catch up. Our own markets also looking relatively weak.
Yes, definitely. I think that the sovereign debt issues in Europe are persisting. I think that it's also leaking now into the banks in Europe, and they're obviously under pressure there. And people are worrying about the banks in Europe, and it's weighing down on us as well. Commodity prices are also coming off quite aggressively, and you can see that on the gold side. Even though the gold's holding up, people are taking money out of the shares. Gold prices are down quite aggressively as well.
Do you think our bank shares are taking their cue from the European banks? We have our banks index down by over 2.5% this afternoon. Do you think there's some local factors that could be adding pressure to our banks?
I think obviously our PMI numbers that came out were much less than expected at 51. So I think just locally people are just seeing how fragile the recovery is, and that's weighing on our banks. I don't think they're affected by the sovereign debt issues directly, but obviously sentiment as a whole in the financial world does weigh on our banks as well.
Just looking at some of the key technical levels, because of course we have come down quite sharply from the highs that we hit in April when we were trading above 29,500 on the all share. Are we getting to any of these key technical levels that could see us pull even further south?
I think on the top 40 all share future, 23,950 is the level, and we've gone through that today. We have to stay above that level over the next few days. If we don't stay above 23,950, currently below that, we can open it all the way up down to 23,000, which is about 3.8% lower. So we can retest that 23,000 level.
What's the downside to these markets if we do test those levels? I mean, could we see a much bigger pullback than we have already seen on the markets, Rob?
Well, the market's got about 3.8% to go down to get to that 23,000 level. If we get to that 23,000 level, there'll be a lot of support there. We don't really want to see what happens if it breaks those 23,000 levels. That leaves the market to crash another 2,000 points, probably about to 21,000, 21,200. So we'll just have to wait and see. I think there'll be good buying opportunities at around the 23,000 level, but we have to take a look at the world economic sentiment if it gets down to that point at the time.
Of course, you mentioned our Purchasing Managers Index, which was out this morning, 51.1 for last month. And that was done from about 55 in April. We also had a PMI out of China this morning, and it's also retraced very close to that 50 level. So still expanding the manufacturing sector in China, but the momentum really seems to have been lost. And there are some concerns about China's growth and the momentum we might see in the second half of the year. Do you think that's something that the market's looking at quite closely?
The market's looking at it very closely. We see that after an announcement like that, we see copper now back down to lows that we saw in May. We see nickel also down at lows. So the commodity price is falling quite aggressively after those PMI numbers came out of China. We're looking very closely at that, and obviously we don't want China, which is the biggest emerging market economy around, to start slowing down. It is what's been helping in the commodity prices over the last few months. And we'll have to wait and see over the next few months, can they pick that PMI back up to about 55. Then we'll settle down and move back up into a bull trend. If it doesn't, commodity prices will flatten out and weaken, and we'll be under pressure for the rest of the year.
Of course, we also had some Indian growth figures out yesterday, and it shows that the Indian economy is really steaming ahead at this stage. So to some extent, do you think that could make up for any shortfall we see coming from China?
A little bit. Obviously a massive economy, India, and the growth figures I think are at 8.6% GDP, which is a very good number. On the manufacturing side, on the manufacturing and construction side, they won't be producing as much as China, but obviously it is positive for the emerging markets that India is moving forward.
We had some results out this morning from Ronettes, investment holding company, and they looked pretty good. Results up quite nicely, about 37%. But then this is a company that really follows the fortunes of British American Tobacco, isn't it?
Yes, most of that coming from a very big surge in British American Tobacco's share price, which was up about 47% over the year. 85% of their earnings come from British American Tobacco, and their numbers reflected that. I think on their balance sheet currently, though, they're looking like they've got 300 million rand sitting in cash, and that looks like it could be cash for acquisition. They need to diversify slightly from just owning British American Tobacco. They did buy some of Lehman Brothers' assets last year, and that looks like they're going to be starting a commodities fund with that. but they do need to diversify slightly. But but the company's looking relatively solid, and a good acquisition now will lead them in good stead for some more growth.
And of course, Ronettes is one of those few companies that's actually positive today. A short while ago, it was trading 0.75% up. One of the counters that's quite negative today, though, is MTN Group, down about 3% a little bit earlier. And of course, there are ongoing rumours about what MTN is going to do next with the likelihood that it's not going to buy Orascom from Egypt. Rumours that it could be looking at re-entering negotiations with Reliance in India.
Yes, there's rumours out that they're looking at Reliance. We're quite interested if they went back into India after trying so aggressively with Bharti and that failing. So, back into India again. MTN have tried so many different avenues to try and get extra growth out of their current model. So we just have to take a look at the moment. The market doesn't seem to like it. They're down about 3%. They do want extra growth on their balance sheet, and they're just battling to find it. The problem that we have there is if they can't find anything, well, they end up paying too much for the acquisition that they finally do. So we're watching it closely. We'll have to wait for more information out on the market, though.
Rob, the markets from here, would you expect this continuing weakness and volatility to persist?
Yes, I definitely think so. The next few weeks are going to carry on being volatile. We're going to need some clarity still from Europe and the sovereign debt issues, and if they're going to have enough money to stop any defaults and put pressure on those European banks. If that can settle over the next 2 or 3 weeks, then we can move forward again. But at the moment, it's very volatile. Probably keeping a little bit of cash in the bank at the moment.